So today we are going to discuss the adjustments about deferred revenue expenses. Means expenses which are paid or made during one particular financial year, but the benefits of these expenses is to be receivable for next 2 or 3 years. The firm will be benefited not only in the current year but in the future 2 or 3 years or even 5 years. If we will get the benefits of that expenses, then that expenses are to be treated as deferred revenue expenses. So deferred revenue expenses is a fictitious asset and it should be shown on the asset side. It is our fictitious asset and that expenses are to be shown on the asset side fully, and to the extent of the benefits with the current year. For the current year, we have to deduct that amount on the asset side, and this portion, whatever amount is deducted from that deferred revenue expenses on asset side, so that amount is to be transferred to the current year's profit and loss account, because this should be the expenses for current year. So to the extent of amount deducted from the deferred revenue expenses on asset side, that amount is to be debited to profit and loss account, because these are the expenses for current year, and remaining expenses which are shown on the asset side, so from that amount we will get the benefits in the next 2 or 3 years. Suppose we paid advertisement bill. We spent an expenses for advertisement rupees 9,000 for 3 years. We paid advertisement bill rupees 9,000 for 3 years. Then advertisement in the first year, this advertisement to be shown on the asset side, and out of that one third portion is to be deducted. There is 3,000 to be deducted. So 6,000 should be appeared on the asset side, and 3,000 is to be shown on the profit and loss account. These expenses are to be also shown in another way. Sometimes the recording of these expenses to be shown in another way. On debit side of profit and loss account, total amount is written to advertisement 9,000 in the inner column, and if this salary is paid for 3 years, so 2 years salary is treated as prepaid advertisement. 6,000 is treated as prepaid advertisement. So 6,000 is to be deducted from the total payment of salary rupees 9,000, So in this case also 3000 will be appeared on the debit side of profit and loss account, and the deducted amount 6000 as a prepaid salary. So all prepaid expenses are to be shown on the asset side. So prepaid salary rupees 6000 to be appeared on the asset side, and 3000 is debited to profit and loss account. Any one way or one method can be applied. So prepaid expenses paid for the next 2 or 3 years. So then that expenses are called as deferred revenue expenses. Mainly in the case of advertisement, this adjustment is to be done. Then one or two adjustments are also to be studied. Revenue expenses included in capital expenditure. Revenue expenses included in capital expenditure. Then we have to make adjustment. Suppose repairs to building. Repairs to building is a revenue expenses. And if wrongly that repairs to building is included in the amount of building in the capital expenditure, revenue expenditure is included in the capital expenditure. Repairs to building is the revenue expenditure and it is wrongly included in the capital expenditure in the building. So we have to give effect on the asset side and to profit and loss account. So on asset side, from total amount of building, suppose repairs 2000 was there and building amount is shown rupees 1,02,000, and in this 1,02,000 repairs to building amount rupees 2000 is included. Then on asset side, 1,02,000 is to be shown in the inner column as a building, and from this amount we have to deduct repairs to building 2000. So 1 lakh is to be shown on the outer column on the balance sheet asset side. So building is of rupees 1 lakh, and this 2000 which are deducted, so that 2000 is to be debited to profit and loss account as repairs to building. Repairs to building. Repairs to building is a revenue expenditure but wrongly included in capital expenditure. Then we have to deduct that revenue expenses from that capital expenditure, and net amount is to be shown on the asset side, because capital expenditure are always asset and repairs to building is a revenue expenditure, and revenue expenses are always debited to either profit and loss account or trading account. But in the case of repairs, renewals, these are the indirect expenses, and all these repairs or renewals expenses are debited to profit and loss account. Like this, opposite adjustment is there. Capital expenditure included in the revenue expenditure. Capital expenditure included in the revenue expenditure. Suppose we purchased a building, we purchased a machinery worth rupees 47,000. We purchased a machinery worth rupees 47,000. And on the same date, we spent installation charges rupees 3,000 for that machinery. We paid the expenses for installation of machinery. And that installation charges, if wrongly included in the amount of wages, these 3,000 wages which are given for installation of that machinery, this 3,000 was wrongly included in the amount of wages. So from the total amount of wages, we have to deduct installation charges, and these 3000 to be added into the amount of that machinery. Suppose wages are given rupees 22,000. So from that 22,000 we have to deduct 3,000 as installation charges of machinery. On debit side of trading account, because wages always appears on trading account. Debit side on trading account, we have to deduct rupees 3,000 from the amount of wages. So 32,000 less installation charges of machinery 3,000. Outer column 29,000 wages expenditure, and these 3,000 are to be added in the amount of machinery. Machinery, suppose 47,000 is given in trial balance. So on asset side we have to write machinery 47,000, add this 3,000, add installation charges 3,000, then the cost of that machinery comes to rupees 50,000, and after including installation charges rupees 3,000, 47,000 actually purchased machinery, purchase price of machinery 47,000 plus 3,000 installation charges. So cost of machinery comes to 50,000, and then we have to make an adjustment if there is given that depreciate that machinery at a specific rate. So depreciation is to be charged after making adjustment of that installation charges. So first of all, installation charges are to be added into the cost of machinery, which is given in the trial balance 47,000 plus 3,000, 50,000 should be the cost of that machinery, and on this 50,000 we have to provide depreciation on that machinery if there is adjustment in case of depreciation. So installation charges is capital expenditure, and this capital expenditure wrongly included in the revenue expenditure, that is in wages. So installation charges, fixation to furniture receipt. Installation charges, fixation charges are the capital expenditure. Though that expenses are included in the revenue expenses, that is the wages or salaries, then that are to be deducted from that wages or salaries and added to the amount of that particular asset, either furniture or machinery. So here two types of adjustments: revenue expenditure included in the capital expenditure, and capital expenditure included in the revenue expenditure. So out of these two adjustments, one adjustment should be asked in the board problem. So there are so many adjustments, but you have to think. If you see the board's problem, 5 adjustment, and now from current year this problem will be asked for 12 marks, so not more than 5 adjustments to be asked. Maximum 5 adjustments should be there. So in this 5 adjustment, closing stock, depreciation, unrecorded purchases, unrecorded sales, RD, interest on capital, salary to partner, this adjustment will be asked. So many adjustments are there. I have explained 13 to 14 adjustment through 3 to 4 videos, but there are so many adjustments are given in your textbook. You should read it, write down, and if you have any difficulty, then you should ask any time on WhatsApp or by making phone. Thank you.